Welcome to this explainer. Today, we're diving right into the mechanics of modern wealth and the staggering, almost unimaginable global footprint of a single financial institution, BlackRock. If you've ever wondered who actually pulls the levers in the modern economy, well, this is exactly where you start.
Here's how we're going to break it down today. 1. The $15 trillion titan. 2. The power of iShares. 3. Aladdin, the central nervous system. 4. The ESG political tug-of-war. And 5. Tokenization and private markets.
Let's jump into part 1, the $15 trillion titan, scaling modern finance.
To really wrap our heads around BlackRock, we first have to talk about the sheer, almost incomprehensible size of the assets they actually manage. Back in early 2022, BlackRock made headlines and etched its name into the history books. They became the very first public asset manager to cross the $10 trillion milestone. At the time, honestly, that felt like an absolute ceiling for the industry.
Well, fast forward to mid-2026, and they have completely shattered that ceiling. BlackRock's assets under management exploded to a record $15.3 trillion. That's trillion with a T. To put that into perspective, they are managing a pool of capital that literally rivals the gross domestic product of entire continents. It's wild.
And this growth, it isn't static. It's a living, breathing metric. In just the second quarter of 2026 alone, they saw massive net inflows of $192 billion. That highlights just how deeply embedded BlackRock is in the global economy. I mean, whether you realize it or not, this immense scale means BlackRock is highly likely touching your own retirement funds or even your local infrastructure.
Moving on to part 2, the power of iShares, the engine of growth. So, you might be wondering, how exactly does one firm attract and manage this much capital on an ongoing basis? Well, the answer largely lies in their product offerings. Their iShares ETF franchise, which stands for Exchange Traded Funds, just crossed an unbelievable $6 trillion in assets under management in 2026.
Look at these numbers. The iShares platform roughly doubled in just 3 years. While it's heavily driven by traditional core equity and bond index funds, they're also leading the charge in active management, gathering over $70 billion in net inflows there recently. And this is a totally global phenomenon. In Europe, iShares raised $80 billion in the first half of 2026, and in the Asia-Pacific region, locally based iShares crossed $100 billion. Clients are just aggressively seeking out these easy-to-trade, tax-friendly investment vehicles.
Let's look at part 3, Aladdin, the central nervous system. Listen, you absolutely cannot manage $15.3 trillion with standard spreadsheets. You need a powerhouse. Aladdin is utilized by over 20,000 users across 47 different countries. It isn't just a piece of software, it's practically the operational foundation for modern risk management.
If we had to define it simply, Aladdin is the central nervous system of global finance. It's an investment platform that unites information, people, and technology to manage money all in one place. It provides comprehensive risk analytics, portfolio management, and a common data language that speaks across both public and private markets.
Now here's what's truly fascinating. Aladdin's power extends way beyond BlackRock's own walls. It is the technological backbone for other massive competing institutions. For instance, Franklin Templeton selected Aladdin to unify its investment tech and reduce complexity. Citi deployed Aladdin Wealth to its private bankers to tap into those advanced risk and data insights. And the London Stock Exchange Group, LSEG, is expanding its partnership to integrate pre-con private markets data directly through this ecosystem. Think about it. When the entire industry speaks the same technological language, the company that wrote the dictionary holds an incredible amount of influence.
Which brings us to part 4, the ESG political tug-of-war caught in the crossfire.
When you reach this kind of immense scale, you inevitably attract intense friction. BlackRock has found itself caught directly in the crosshairs of a highly polarized political tug-of-war regarding environmental, social, and governance, or ESG, investing. On one side, conservative states like Florida, Texas, and Louisiana are pushing back hard. Louisiana alone announced it was pulling $800 million, accusing BlackRock of prioritizing woke or ideological investing over financial returns. But then, on the exact opposite side, progressive entities like the New York City Comptroller, who oversees $43 billion of the city's funds, accuse BlackRock of not doing enough, claiming the firm is backing away from net zero carbon commitments and continuing to invest in fossil fuels.
To give you an idea of the progressive perspective, the demand for action is crystal clear. As NYC Comptroller Brad Lander stated, the global finance community has a critical role to play. BlackRock must begin to lead in deeds, not simply words.
Meanwhile, the conservative pushback is equally severe. Former GOP Speaker of the House Paul Ryan highlighted this sentiment, warning that Republicans will go after woke corporations. So, BlackRock is essentially walking a tightrope right now, facing immense financial and political pressure from both sides of the spectrum for the exact same investment strategies.
Finally, let's turn to Part 5, Tokenization and Private Markets, the Future of Finance.
Stepping away from the political battles for a second, BlackRock is aggressively looking ahead to shape the future of money. A massive part of this strategy is their expansion into private markets. Just look at this timeline. In March 2025, they acquired Precision to dominate private markets data. By July 2025, they brought in HPS Investment Partners to expand in private credit. And in 2026, they completed the purchase of Global Infrastructure Partners. They're tapping into what their CEO calls a generational investment opportunity to help technology companies fund their massive infrastructure and data center needs.
But the real frontier here is digital. BlackRock's step-by-step strategy to enter the crypto space is incredibly calculated. Step 1. Bridge traditional capital and decentralized finance with tokenized products, like their BUIDL money market fund. Step 2. Become a top stablecoin reserve manager. They already manage $60 billion in reserves for Circle. And Step 3, which is the ultimate ambition, tokenizing long-term investment products, like those iShares ETFs, directly onto blockchains, so investors can allocate funds without ever leaving their digital wallets. And here's why this really matters: scale. There are roughly 5 billion digital wallets globally. BlackRock sees tokenized assets as the spear tip to access an entirely new distribution channel and a brand new class of investor. They are basically positioning themselves to be a digital wallet native asset manager, bringing traditional Wall Street directly to the blockchain.
So we've seen the $15.3 trillion in assets, we've explored the Aladdin technology serving as the nervous system for the global market, and we've mapped out their future in digital assets. I'm going to leave you with this to chew on. Does this unprecedented concentration of technological and financial power actually stabilize our modern economy, or does it introduce an entirely new, unseen systemic risk? It's definitely something to think about. Thanks for joining me for this explainer today. Keep learning, keep questioning, and I'll see you next time.